Hi, welcome to Trendy Trading. Today is the 12th of July, 2020. I want to together a video, just kind of impromptu, really quick. One of our most successful strategies that we use here is called the neutral strategy. And I find it remarkably very reliable. And the way that I do that is by using a combination of range, supply and demand, and Fibonacci, and basically putting all that together and synergistically coming up with one of the best blueprints out there. We also teach this and how to identify it. And so I can't necessarily get into the specifics, but what I do want to show you, it's just kind of an idea of how you can start to recognize patterns within just a range itself. So here's a blueprint that we did on a name CRWD, CrowdStrike. And, a couple things, I'm always looking at trend, right? That's where Trendy came from, is everything we do is based on trend. And Fibonacci is really a great factor of trend. And it blows me away that a lot of traders don't actually use Fibonacci, or they don't understand how to place that. But again, we do teach this here at Trendy Trading. Let's go ahead and just take a look here really quick. I'll show you the blueprint and then give you an idea of how you can set something up, again, without going into too many specifics. Now, this is CrowdStrike, and I'm going to bring over our Discord room here just so you could see, that what I'm saying holds true. And you can see here, this is CRWD. I give always the same thing: trade length, setup, the entry, the risk, and the targets. And so when we open up this chart itself, give me 1 second here, you can see that the neutral here is between 106.15 and 104.43. And then we have some targets: 109.73, 111.56, 113.73. Let's go ahead and we're going to reduce or minimize that. And you can see that price did indeed come into our neutral zone, 106.15 by 104.43. This is where we look for buyers to step in during an uptrend. Basically, again, it's a percentage of a range of multiple ranges, not always just the one range that you may see. And what I mean is when we step back and we take a look at trend, we have to be able to identify a range that we want to trade. And the way that we do that is honestly just kind of bringing it back to basics. And I tell traders, try to use the weekly and the monthly charts. And because the candles are a little bit bigger, it's a little bit cleaner, it's a little bit easier to read, and you can kind of see things a little bit more clear. And then as you master the higher time frames, you start to work down into a smaller time frame to identify that same exact pattern. It's just that when you bring it down to a smaller time frame, then your trade is actually based off of smaller increments. Meaning if I'm looking at a weekly and a daily, then I expect to get paid somewhere between a couple days to several weeks to a month. If I'm looking at something that is 4 hours, I expect to get paid within a day to 2 days, maybe even 4 hours. If I'm looking at something that's 15 minutes to 30 minutes, I'm looking at to get paid within an hour or even as soon as 15 to 30 minutes. Okay, so here we have a range and it's quite easy to see, but sometimes it's not, right? And so from here, okay, the pivot high into the pivot low is a range. And so if we were trading off of a range, we could find where certain demand levels are and certain supply levels and so forth. And we find within this range where buyers like to step in. Well, I've already done all that work for you, and I found a way that to make trading that much easier. Meaning, and let me just rephrase, okay, trading is not easy. Process can be easy, and around that process, you do have to find yourself. And what I mean by that, a lot of veteran traders will tell you, finding yourself could at times mean losing. It could mean just taking that leap of faith in your conviction and understanding that what you were doing is making sense. It could be being humbled by the market, thinking that sometimes we know what we're doing, and then immediately finding out we don't know what we're doing. But what one thing is true is that when you find a process, you stick to that process and you let the probabilities play out. And after a long sample size of this, going back and back testing, you find that it's a very unique process. You want to stick to that. You don't give it up. Don't go from one process to another to another. It just really, at the end of the day, falls into negative territory. Typically, this is where we find traders giving up and having a really hard time. So again, back to the neutral, you can see here this one was quite interesting. We had a neutral from weeks ago that worked very well. You can see there. I haven't touched this thing, by the way. And then we came into this past week with a neutral, and we traded out of this. So overall, this move, being 68 all the way up until about 117 or so forth. So not a bad trade there on CrowdStrike. But again, range is important. So within this range, I will teach you how to find the most profitable entries and how to use a risk to reward profile. So for us here, we literally take this is your risk. So in this case, when price pulled back to here, my risk, all right, was less than $2. And my return was pushing up, from here, $10 to $12. So not bad. $2 risk, $10 to $12 return, not bad at all. All right. So the other thing though is a lot of people talk about the positive side. The negative side, right, would be if you got stopped out. But what's amazing is these blueprints are set up before price gets there. And so we already know what we're going to lose. In this case, on equity, I know that I could lose the difference between 106.15 and 104.43. And on options, I also teach how to figure out how much you will lose using delta. Okay. And so lots of really neat things that we teach to help, beginner traders and veteran traders. And once again, the neutral strategy is probably one of my favorites. And as you can see, this works really, really well. Now we love to do this. I'm just going to give you a sneak peek into this week and kind of show you what's going on here. I'm going to pull up the diamonds, the DIA. So this is the Dow Jones ETF here. And we do this every week. All right. And so we do this on your favorite stocks like SPY, DIA, IWM, and the Qs. And we do the neutral strategy. So every week we come in with what we call the broad market analysis, and it goes over several charts. And these are trade plans. So the way that we approach this, we basically go long out of the neutral at the top and into targets. And we've been doing this for a couple years now. And the strategy itself, like I said, is remarkable. To the downside, you can see your targets. If we start to break down, you can see your targets. Now, here's the thing. Targets to the upside are resistance until they're not. Targets to the downside are support until they're not. And the one thing that we really pay attention to here is the overall trend. So like DIA, right? Overall is just a big mix of everything. It's neutral to bullish right now. Anything can happen. All right. So we take that trend into consideration. We take EMAs into consideration. We take Fibonacci's into consideration, and also range and what we call the trendy edges. Now, this is the meat and potatoes, and we're not going to get into that, but those are my proprietary scripts that find supply and demand without having to look for candle formations and range and all that fun stuff. And we teach you all about that as well. If you're interested in checking us out, just go to trendytrading.co. And if you have any questions, find us here on Twitter at TrendyJohn, and you can ask me questions privately. Just send me a message. And again, my Twitter handle is at symbol trendy. The E is a 3, so it's TR3NDYJON, Trendy John. And you can send me a message if you have any questions. I hope that you come and visit us so that I can teach you a strategy that I feel can definitely help you out.